thanks so much for joining us, Nathan, on this. How much margin do you think is going to be generated by this deal?
Well, at this time, it's difficult to know, given that we just have some of the breaking news coming across. But generally, the accretion does look to be attractive. For 2012, it's going to be about break even, but the company has actually estimated that by 2013, it's going to be 5% accretive. We, on initial back of the envelope and estimates, actually think that it could be better than that. There is a real optimal mix between Constellation's retail business and Exelon's baseload generation portfolio. And we think that there's a lot of margin that both of those companies give away that, if they merge, should be able to capitalize and keep it within the company and improve profits.
Nathan, what I'd like to know is whether Constellation shareholders are getting enough from Exelon.
I think that's going to be a question that will be raised. Clearly, Exelon's offer has been better than some of the more recent bids for Constellation. But having said that, I think investors in Constellation may look at Exelon's deal and try to determine whether or not the multiple that they're paying currently is satisfactory for the operations of Constellation, the assets of Constellation. In our view, I think there's some real benefits for Constellation. Number one, they're getting a business, the combination should allow the Constellation to grow more quickly and add shareholder value to Exelon's, or both Exelon and Constellation shareholders. And also, if you think about the 18% premium that Exelon is paying for Constellation, that's a much higher than the average premium recently paid for deals. And then lastly, I would just point to the doubling of Constellation shareholders' dividend.
Nathan, we thank you so much. We know, obviously, in this business that size matters. $7.9 billion. Nathan Judge joining us there. He is an analyst at Atlantic Equities, joining us there by phone from Philadelphia.